Hi, everybody. Welcome to the On Fire Show. This is your host, Daryl McKell Brooks. I have a great guest coming on, Mr. Tyrone Keys, out of Maryland, and we're going to be discussing about what's happening with the problems, the crisis in the banks in America. So we really have a great show, and he's going to come on for like 15, 20 minutes, have a great discussion. And I first seen this guy on Pop and Politics. I said, I got to have him on my show. So I'm waiting for Mr. Tyrone Keys to log on. There's Tyrone Keys. Are you there? Welcome to the On Fire Show. Thank you all for supporting. Please share the post. Please listen. We have a lot of great information, but we're going to be talking about the banking crisis, FDIC. You know what's going on with J.P. Morgan. You know, buying up J.P. Morgan Chase, buying up all the banks. You know, it's a great discussion, and people need to know what's happening. Should you be worried as an American, as a you know, you have your money in your bank. Should you be worried? And that's always the question. I get people call me up, emails, and see me out. Says, you know, Daryl, should I be worried about my money? Well, here is a brother out of Maryland, and he's coming on the show. Tyrone Keys, are you there? You can just say something. I sent you an invite. You're welcome to come on the On Fire Show. I am excited to have him on. Exciting person. I saw him on Pop and Politics. Hey, Tyrone, are you there? Yes, this is the On Fire Show. It's Friday, and you know they're having first Fridays down in Trenton at the Smokehouse in Trenton. So if you're in Trenton, make sure you go to the Smokehouse. I might go check it out myself. All right. So Tyrone Keys just says you're on. All you got to do is say something on the yeah. Go to our page and say something. You log on. So, how your Fridays doing, y'all? I'm just so excited. It's Friday. I'm taking a little trip next week, and I am excited about that. I'm going down to North Carolina, and listen, this is going to be a powerful trip. But I have a powerful show. Mr. Tyrone Keys is coming on. And Mr. Keys, are you there? All you got to do is say something. Type on, I am here. Say something again. Boom. All right, he's on. Waiting for Mr. Tyrone Keys to
Okay,
log
there
on.
we go.
All
There
right,
we
I am
go.
excited. How you doing, brother?
I'm good. How are you, Daryl?
All right, I was watching on Pop and Politics. Who's this guy, Tyrone Keys? And so I just, so I had to invite you on the show. We're probably going to do something in the next week or so. But, you know, you were talking earlier about the banking crisis. And so, first of all, explain to the audience who is Tyrone Keys.
Okay, well, actually, I'm born and raised in Baltimore City. Went to Coppin State College and then George Washington University. In between now and then, I became a lobbyist for Verizon, went all around the world representing them. Then in the early 2000s, my wife and I decided that we wanted to branch out on our own. So we founded businesses. We have a real estate company as well as a financial services business. And we've been in business for about 20 years now, believe it or not. The time went by very quickly. And we also have a YouTube channel called Soldiers of Finance, where we try to educate the public into what's going on out here. And I bring a fusion of our financial knowledge, combine it with, you know, what I learned in D.C., capitals around the world, to try to help people navigate this evolving economy.
Okay, yeah, and this economy is very, it's evolving. Yeah. So one of the things I want to talk to you about is the banking crisis. You know, we've had, I think about, what, 4 or 5 banks failed in the past 6 weeks. What's happening with this crisis? And should the public be worried about it?
Yeah, we've seen SVB, or they call themselves Silicon Valley Bank, Signature Bank, and here this week we had First Republic. So they have all just gone defunct. But we have a host of, they're literally dozens of other banks that are in a situation where they have deposits leaving, okay, because people are getting nervous.
Mm-hmm.
But also, another reason why those deposits are leaving is because interest rates are higher. So people are finding better ways to have their money work for them, okay? Take a look at Wells Fargo's interest rate on a savings account. It's far less than 1%, all right? That's nothing.
Mm-hmm.
So if you can take that money and go and put it in a T-bill or, you know, some stock or something, that's another reason why that money's coming out of there, out of banks.
Okay.
And we all know that these banks, they make money by taking your deposit,
Mm-hmm.
giving you this interest rate, and then you turn around and get a credit card or a mortgage or a car loan with them, and they have a higher interest rate for that. So that spread is how they make their money.
Mm-hmm.
Another factor with regard to banks and the trouble that they're in is a lot of banks, including some of the big names like J.P. Morgan and Bank of America, they have an inordinate amount of uninsured deposits.
Mm-hmm.
So what do I mean by that? Roku, you're familiar with that company, right?
Yes.
The streaming company. They had $500 million in Silicon Valley Bank. Now the FDIC insurance amount is only $250,000 per depositor.
Mm-hmm.
So think about all of that uninsured money. And the problem there is what we've seen the United States start doing is saying, we're going to make certain banks whole. So they went to Silicon Valley Bank and gave all of those people every dime they had, over and above the 250 FDIC amount.
Mm-hmm.
So at the end of the day, you and I and the other taxpayers, that's a bill that we foot, okay? So that's kind of the 30,000-foot view of why the banks are having these pressures right now.
Yeah, I see, you know, I was doing some research, and they're now talking about, what is it, PacWest and Western
Yep.
Alliance banks are on the chopping block. So to me, you know, we talked earlier about, I guess, what, 2007, 2008, and how you see now with the banks that they're bailing out, FDIC, you know, they're bailing out, the money that they're putting out is way more than in 2008 than the banking crisis. And there's only, what, been 4 or 5 banks.
Yeah, it's been a small number of banks, but the combined assets of those banks that have failed in 2023, the combined assets of those banks are far greater than the combined assets of the banks that failed in 2007, 2008. And when you think about that, we had Washington Mutual, we had Bear Stearns, we had Lehman Brothers. Okay, so you had some really big institutions fail. Okay, so this is and let me just give you my personal philosophy with banks. I personally believe that banks are a place where you keep no more than 3 months worth of cash, okay, to address bills, and you know, hot water heater goes up, you can address it, okay, but money needs to be out there working for us as hard as we work for it, if not harder.
Yeah,
so
you're right.
You know, we talked about the paltry interest rates that banks are giving. There's a little easy little calculation. It's called the rule of 72. So if you take whatever interest rate you are making, let's just say 1%. All right, you divide 72 by your interest rate, in this case 1%, that's telling you how long it will take for your money to double. So you put $1,000 in a bank at 1% today and just leave it there, it will take 72 years to double. Okay.
Wow.
So this is an illustration of why we need to have our money making an assertive interest rate. Okay. And banks just can't do that. If you want to make money with a bank, then you go out and get a loan and buy some investment property or build a business, or that's the way you make money with a bank, not by putting it in a savings account or a CD.
Yeah. So, I mean, what do you see for the future of the banking in America? You know, you said JP Morgan, Chase are buying the banks. Have bought what, all 4 of the banks, I believe, 4 or 5 banks. already?
They purchased
Yeah,
they purchased assets from the three
yeah,
that have failed.
yeah,
They purchased a tremendous amount of assets
yeah,
from First Republic.
yeah.
Absolutely.
So what happens? People are thinking the domino effect. What would happen? I guess. What do you see in the next year or two if this gets worse? What could happen? And should people worry? And why should they worry?
Well, I think to take the last part first, I think people should always
Mm-hmm.
be very concerned about their money because we're out here working for it. Time is going by, and a lot of people are getting close to retirement or they're in retirement. They don't have another 30 years to
Mm-hmm.
make this money to recover. So, yes, in fact, I see what's happening is these larger banks are positioning themselves to benefit from the failure of the smaller banks.
Mm-hmm.
Okay. Now, Jerome Powell, is highly likely that the Fed will stop raising interest rates going forward.
Mm.
He
Okay.
came out and he made a statement. I'll paraphrase it. He basically said that he believes the interest rates, what they recently did this week, is sufficient to bring inflation back to 2% over time. Okay.
Mm-hmm.
So that signals that he's going to pause on that. And what people also have to remember is inflation is not a bad thing for the U.S. government because it allows them to better manage the U.S. debt. All right. Now,
Mm.
it's not good for
Okay.
you and I,
Mm-hmm.
okay? But they don't make decisions for you and I. They make
Mm-hmm.
decisions on a self-serving basis. So what I would suggest is that people, and I've done this, I've got an account with a large bank, I've got an account with a credit union, and with a small community bank.
Mm.
And with the credit union and the small community bank, they have been very good about the management communicating and answering my
Yeah.
questions as to the health of the institution. So I
Mm-hmm.
would encourage people it's your money. Don't be shy about asking them to let you know, is this place solvent?
Mm-hmm. Yeah. So we're looking at the possibility. I've been watching online and watching different talk shows. The possibility of you know the uh, something really major could happen,
Mhm.
and we know that the FDIC has about what 128 billion dollars. A lot of yeah. So could that? Do you think it's possible that the FDIC will stop bailing out banks?
Uh,
Has that ever happened?
it, it's never happened, okay?
Mm-hmm.
But as you just said, they do not have the amount of money that would cover even a quarter
Yeah,
of the small banks,
yeah.
okay,
So
in
what
terms of
happens?
deposits.
So what happens if they run out of money?
Well, a couple of things could happen. You could have the Treasury step in and
Mm-hmm.
do what they did with SVB
Mm-hmm.
and just have, the Treasury just backstop it, aka the taxpayer.
Mm-hmm.
Okay.
Okay.
Um, that's probably what you would see happen. Otherwise, there would be absolutely no faith in the remainder of the banking system, and that
Mm-hmm.
would just cause a domino effect.
Mm-hmm.
Okay. So I think that Janet Yellen and the Treasury, they are willing to do that if they believe it will stave off a larger crisis.
Okay.
Um, yeah, yeah.
All right. Well,
Will,
listen. Uh-huh. Go ahead.
yeah, go ahead.
No, go
No, you
ahead.
go ahead.
No,
Um, I was just saying, will a quarter go bankrupt? I don't think so. But it is true the FDIC does not have the resources to cover even that amount.
yeah. Wow. So listen, I just want to thank you for coming on. Listen, Tyrone Keys, you're definitely going to come on some more. We're going to have some different discussions, and I have another buddy of mine have us on a three-way conversation. He is a Professor Murray Sabin. Matter of fact, I was on the phone with him. I told him about you. So listen, I just want to thank you for coming on. Is there anything else and good information you would like to talk about or say to people? And what's the name of your website and the YouTube page again?
Okay. First of all, thank you so much for having me
Mm-hmm.
on. I've enjoyed it. The YouTube page is Soldiers of Finance. I encourage
Mm-hmm.
people to go over and hit subscribe. And if you'd like to learn more about our business, we're M as in money, CE, MCE now.com.
All right. Listen, I just want to thank you for coming on. I said I saw you on Pop in Politics. I said I gotta have you on. So I just want to thank you once again. People, please share this page. Let everybody know who. Let them know about. Listen, Tyrone Keys and what he's doing down in Maryland. It's a great thing, and I want everybody to share this page, send this out to their friends, especially individuals who care about their money. Because most people they care about their money. They're afraid. They're watching the news. They're watching the media. They're listening what's going on the radio, internet. So people are afraid out here. But Brother Keys have given us some great information. And check out his website. Go to his YouTube page. All right. So listen, I
All
just want
right.
to thank you for coming on. God
Thank
bless. Be safe.
you for having me.
Okay.
All right.
Take
Have a
care.
good one.
You too. Hi, this is Daryl McKell Brooks of the On Fire Show. That was Tyrone Keys. He's the first to come on the show. I am excited. First time ever coming on the On Fire Show. Listen, it's going to be an exciting a few months having him on, having Mary Sabin, Professor Sabin on. So I am just so excited to have him on. All right. I just want to thank you all for watching. God bless. Be safe. It's Friday. And enjoy your weekend. Take care. Be safe.